Hey guys, Jeff Beers from the 40 Finance channel. Today I'm going to be looking at digital advertising stocks that are not named Google, Amazon, Facebook, Apple, you name it. We're going to get one layer deeper into 3 digital advertising stocks that could do very well in 2019. Hey, if you like content like this, please do me a favor and like the video, share it with your friends, subscribe to the channel. Got a lot of good stuff coming up over the next few weeks. The first company on our list today is QuinStreet, ticker symbol QNST. And QuinStreet acts a little bit like a digital agency. Okay, so they have some proprietary technology that helps advertisers match demographics, general consumer interests. And they use that technology basically to deliver results, which is leads, conversion, etc. They work with clients perhaps who have ad agencies, internal workforces, who are spread thin across all these different channels. And they come in and they say, look, we've got the technology. Let us know who your customer is. Let's do some experimenting. Let's capture leads. Let's capture purchases. Let's retarget. And they sort of do the thinking for you, I guess you could say. And while QuinStreet is a very small company right now, they had 100% revenue growth last year, which is fantastic. And the revenue outlook for 2019 is 15 to 20%. Currently, you have a PE of $48, but a forward PE of 21. So as those revenues come in, the cost of the earnings go down. So it's a very good sign. From an analyst perspective, the stock's only anticipated to grow $2 or $3 this year. The bigger play for QuinStreet, I think, is to buy a few shares as speculation, throw it under a rock somewhere and wake up in 3 or 5 years and see where it's at. I mean, you can get 100 shares of this company, for just over $1,000. So if you have some speculation money on tap, this might be a company to look into. Next up on our list of digital advertising stocks, we have The Trade Desk. So The Trade Desk has a very interesting business model. They're basically a software company in the sense that they tie into all the major digital advertising platforms, right? So they tie into the Googles, Amazon, Facebook ad networks, but they also plug into almost every other one. So when you think about what's going on with streaming television ads, podcast ads, anything you can imagine where people are using digital advertising to reach their consumers, more than likely the Trade Desk platform plugs into their advertising centers. And what it does is it allows folks to manage large swaths of inventory across multiple touch points, all in one platform. So it's very helpful for advertisers, agencies, and independent marketing professionals. The thing with Trade Desk, I really like this company. I really like its potential for the future. But unfortunately, it's been pumped up a little bit in the news at the back end of 2018. It's got a lot of excitement behind it. You see here on the 5-year chart how it's grown really fast. That's brought it to a PE ratio of 95, forward PE of 50. So it is a little pricey. Now, the growth or the revenue outlook kind of offsets that because you're looking at a plus 50% revenue outlook. That's good. Me personally, I'm going to wait for the price to come down a little bit. I think it's at its high right now, at least for the next quarter or two. I'd like to see a dip somewhere to maybe get in and bring these numbers down. But the health of the company, the prospects for the future are all there. I just personally like to buy things a little bit cheaper. All right, our last hidden gem of the digital advertising space has to be Roku. I've talked about Roku quite a bit over the past few weeks, so hopefully you've caught some of those videos. So Roku is another platform maker. This television runs on the Roku platform, And what it does is it's basically made for cord cutters, for folks who access a lot of internet through their television, and it just turns your television into like a big widget board, right? And it's got this really kind of simplified remote control that helps you navigate around. It's a simple but great technology, particularly if you're just cord cutting and running TV off the internet. Now, that's all good, but why is Roku on the digital advertising presentation we have here today? And the reason is because they have hundreds of free channels, which are basically widgets that come up on this board that they sell advertising against. And their number one channel is their brand name channel, which is the Roku channel. So everyone who advertises on the Roku channel, where they sort of do rehashed movies, reruns, things like that, it's 100% free. You can access it on the internet. They're trying to roll something out where you access it on mobile phones. But then everyone who has a Roku set has instant access. And as a matter of fact, they put that Roku channel right smack dab in the middle. So they're getting a huge amount of views. Users for Roku have jumped incredibly in 2018. They expect more of the same for 2019. And what it means is more eyeballs on their streaming channels and their streaming properties. So the more people that are watching, the bigger Roku has an opportunity to sell digital ad space. Just last year, their digital advertising / streaming advertising matched the same amount of money they made from selling their platform. So all the people who bought the Roku sticks and the Roku televisions, that was only 50% of their revenue. The other 50% was in advertising, and that is obviously the much bigger play. Interestingly enough, Roku streaming technology also fits in the back end of things that the Trade Desk offers, so you can kind of see the play in there. Right now, though, we have some problems on profitability because they have not made a profit yet. That does look like 2019 could be the first one. They don't have a lot of long-term debt. It's a relatively healthy company, except they're still in the land grab model, right? So they're still paying a lot of money to get their name out there, get integrated with other places. I'm not ready to buy it yet. I want to see a profit first. I want to see a little more growth. But the revenue outlook for this year of plus 30 to 40% means that profit margin could come in a lot sooner than many expect. And there is a risk of taking my seat, which is to sit on the sidelines and show me the money, is at the price here of $40. As soon as they start hitting any sort of financial revenue targets that investors like, this stock's going to go way up. I'm still going to take the long road and watch Roku with excitement over the next 1 year or so. But if you're in on digital advertising, you think that the market's going to shift away from Google, Facebook, Roku is a great place to look. So keep that one in mind. All right, so those are our 3 names that are not Google, Facebook, Amazon. Obviously, if you're in digital advertising, you have to look at those too as potential stock plays. But this is where the up and coming market is. Hope you guys enjoyed this. My name's Jeff Beers. This is the 40 Finance channel. Please like and share with your friends. I'll see you on the next video.